Hello, Oracles. Today we're going to go over the weekly chart update for Tesla stock. So, a lot of things have been going on, obviously, in the macro environment. Tesla specifically, there's not a ton of stuff going on, but there's a lot of things that are going to be coming up that are going to be moving the stock one way or another. We've got delivery release coming out on April 2nd, so that's in a couple of weeks. Then we've got the earnings coming out at the end of April as well. So, a lot of things that could be moving Tesla specifically in the short term. And then macro environment, there's still a lot of uncertainty that's going on out there. We just recently got the FOMC meeting. The Fed decided to hold rates as they are. This is what was expected. And the market seemed to rebound after that. Now, we're waiting to see if that was kind of a fake rebound and then we'll sell off. Just a lot of still uncertainty in the market. There's a lot of people just kind of holding money on the sidelines, myself included, just waiting to see what's going to happen. I'm still dollar cost averaging in little by little, but I've increased my allocation towards cash to 14% from the 12.5%. And I'll probably bump that up a little bit more because I still think that the next 6 to 12 months is going to be a bit rocky. So I just want to have that cash on the sidelines just in case we pull down. But we'll take a look at the charts and see from the chart standpoint what we could potentially be seeing going on moving forward when it comes to Tesla stock. Because don't forget, the way I view things is you see the charts that can kind of give you almost a path to say this is the path we're going on, but we don't know which way that path is going to turn. And that's when we look to the macro environment news. That's when we look to Tesla specific news to say, well, the news that we get out could turn us one way or another on that path that the charts are showing us. All right, so looking at the charts here, as we've been discussing, we've been on a huge dead cat bounce ever since mid-December here. Our high on December 17th pushed us all the way up to that $480 level, and we have been bouncing down ever since. Above us, we have that little gap at 450. We have another gap at 394 to 401 above us. And then we keep on coming down. And we had all those gaps coming down, which we did end up filling as I predicted. And the gap at 218 also got filled. I thought we had a little more time on filling that gap at 218, but I was wrong on timing, but I was not wrong that we filled the gap. Now, below that, we do have a gap down at 147. So this gap at 147, I've been saying, I think this is all going to depend on whether we get into some massive macro environment issues, or it could be something massively going wrong with Tesla itself. But I think that it's going to be more macro driven, and there's just going to be whatever negativity out there is in the macro environment. If there's something negative with Tesla specifically on top of it, it's just going to magnify that and pull us down to fill this gap at 147. But currently, we are sitting at this 235.86 level, bouncing up from the day before. So we're looking at a little bit of consolidation going on right now. And so I think right now where we're at is we filled the gap at 218. And as I had said before, the 218 gap was going to get filled, and we were going to wait and see what was going on with the Model Q. So now here we are kind of waiting for that moment. And so we're looking at deliveries coming out in a couple of weeks on April 2nd. We've got earnings coming out at the end of April. We'll find out that specific date when we get the delivery release. They'll tell us when in April it's going to be. Usually it's about the third week of April on a Wednesday. So, but with the timing of how this month is going, I have a feeling we're going to be getting earnings on April 23rd. Again, we'll find out that specifically when we get the delivery report coming out. So I think at that point over the next month, and this consolidation may continue for the next couple of weeks because we're just kind of waiting for what's going to be going on with Tesla and the delivery numbers. Now, of course, if something else comes out that we don't know about or something goes on in the macro environment, could move us one way or another. But just looking at the charts here, we have finished this dead cat bounce, look to be consolidating right now and waiting for the next news to move us one way or another. So as I had mentioned, we're kind of following this pathway here. We followed the path down. Now we're kind of following the path straight, and we're just waiting for a different route and a different turn in the path to let us know where we're going to go. And I think from here, once we get those delivery numbers, I think they're going to be weaker than expected, which could end up pulling us down. And I think at that point, if we end up pulling down and get weaker than expected numbers, we test that $200 level. And then if we break below that, then we start looking at different levels below us. But right now, I'm looking at this level here, and we'll just pay attention to what happens to see if we break down below and we end up hitting 200. Now, if we get better than expected numbers, we could bounce up and then probably just wait till earnings to see how actual earnings are looking, because if they are producing that Model Q, you know that we're going to be expecting to see some bottom line numbers getting hit because of production of that. And the production ramp is going to be expensive, just like it is for all of the vehicles that they've created. So when that comes out, we could end up seeing weaker than expected numbers when it comes to profitability. That could pull us down as well. So we may get a little bounce up here for deliveries and then pull down. Now, if we end up getting good delivery numbers and we end up getting good earnings, we could then be pushing back up here. Now, when we push back up, that $250 level has been very strong for us. So I'd be waiting to see what happens at the $250 level, see if we break through that, and then push up from there. Getting back to 394 is going to be a long ways away because, in my eyes, all of this here was completely done because of the election. So we realistically were at that 218 level, got the excitement from the Model Q pushed up to about 250, and then all of the election excitement was in here. So it's not like any of this was fundamentally grown. All of this was strictly based on sentiment. So with that flushed out of it now, to get back up to 394 and 401 to fill that gap, I think we're going to need some strong fundamentals coming out. And right now, looking at the way the year is going, I don't think we are going to be seeing a lot in the way of strong fundamentals for Tesla this year. I think we're going to see a lot of strong fundamental growth when it comes to what's happening with FSD and the build on that, what's happening with the Model Q. But when it comes to the actual bottom line of the company and where those things are going to be affecting the bottom line, we're not going to see that until the end of 2026 into 2027. And at that point, then we can start pushing up to fill this gap. So I do think we're probably 12 to 18 months away from filling these gaps above us here. Now, looking at the RSI had been oversold for a little while here, so we pushed back up above that. We're now at 35, so we're still low on the RSI. Just like the fear and greed index, we have pushed up a little bit on that. But again, we've been bouncing between extreme fear, fear, and neutral all year long. So that tells me that we could be pushing up. Maybe we get back up to 50 on the RSI. At that time, that's when we're going to be getting the delivery numbers out. And then we'll wait and see what happens with those delivery numbers, which will determine whether we're going to go up and get back to that overbought range, or we're going to fall back down into the oversold range. So overall, again, I think Tesla is going to be phenomenal long term. So if you're a long term investor, these could be good buying prices for you at these levels here, because I think this is right now, based upon the information that we have, some of the lowest numbers and prices we're going to be at, unless, of course, we get worse macro environment news coming out and worse expected news for Tesla coming out, which is entirely possible. So this is why I'm not just saying dump all your money into it. And again, you need to do your own due diligence and research and make your own investing decisions for yourself and what's best for you. But for me, I'm looking at it, I'm like, all right, this is definitely a place where I could be adding a little bit of money in, but I still think we've got some time at lower levels to see where we're going to be going at here. This is something I said back in 2022, where that whole entire year, the levels coming down were just, we had some time to buy. Then we ran back up, and now we're coming back down to levels where we could be buying again. My cost basis in my IRA is about 178. My cost basis in my main portfolio is 214. So this is still above those levels. I'm profitable in both. I'm not looking to sell any more of my Tesla stock. Right now, I'm just looking to accumulate, but I have other things I want to buy ahead of Tesla because I think we do still have some time on this. Now, for me, I'm just also looking out 5, 10 years for this in the company. And based upon the way that Tesla trades, we've got plenty of buying opportunities for years to come. So I don't think there's anything bad. It's like kind of looking at Apple. Yes, it would have been awesome if you bought Apple back in the 90s. It would have been awesome if you bought Apple back in the housing market crisis when everything crashed back then. Heck, it would have been awesome to buy Apple when Warren Buffett bought it back in 2016. So any one of those times would have been an awesome time to buy Apple stock. So it's not like there's only going to be one opportunity to buy Tesla stock. I have a feeling Tesla is going to play out very similarly to how Apple played out, where there's going to be plenty of opportunities over time. Microsoft is another one, 90s through now. It's really one of those companies where there's no bad time to buy it. Especially if you wait long enough, it's going to go up into the right over time. There are always going to be times where it's going to come down and sell off a little bit. Maybe it's a little oversold, but this is where you going into value a company itself tells you, a good time to buy. But this is also why dollar cost averaging or 401ks or portfolios that have completely forgot that they even exist typically outperform, because you go through those ups and downs. And as you're just adding money over time, what happens is you buy at some higher levels, you buy at some lower levels, and it just averages out over time. In my opinion, that's going to be the same thing that holds true with Tesla stock going forward. So that's all I'm doing. I'm just doing my things with my portfolio, adding that as we go there. And then I'll just keep on adding as time goes on, as my portfolio allows. So that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.